This is Behind the Headlines, with behind-the-scenes analysis on issues affecting Pennsylvanians, sponsored by the Susquehanna Valley Center for Public Policy. Now, here's your host.
Hi, from Philadelphia to Erie and from Scranton to Pittsburgh, it's Behind the Headlines. I'm Charlie Greenewalt, Senior Fellow of the Susquehanna Valley Center for Public Policy, and I'm joined as usual by my co-host, Maura Donnelly. Welcome to the show, Maura.
Hello, Charlie.
Well, the question on everybody's tongues these days and on everyone's minds these days is, have you been vaccinated? How are vaccinations going in your neck of the woods?
I've gotten one, and I'm anxiously waiting my second one, so pretty soon.
Okay. I'm in the same boat as you are. So I just thought that maybe we should also bring in someone from a whole nother community. Let's go to the community that's very important to us, and I think it's growing in importance these days, and that is banking. I'd like to introduce Mr. Kevin Shivers, who is the president and the chief executive officer for the Pennsylvania Association of Community Bankers. Welcome to the show, Kevin.
Thanks for having me, Charlie. So good to see you. You as well, Maura.
It's good to see you, and it's good to have you on the show. I have a question for you for some time now. You had been the former leader of Pennsylvania National Federation of Independent Businesses, and you moved over to the bankers in 2019. Is that correct?
Yes.
What's the difference in the organizational roles, in your role? How's the transition going, Kevin?
It's been fantastic. I traded a hat that had the small business logo on it for the one that had the small bank logo. I represent community banks in Pennsylvania. Last year, Pennsylvanians and America rekindled their love affair with community banks. And it's a great opportunity for me because I get to help those institutions that have been so involved and so supportive of our small businesses in this country, in particular through the federal Paycheck Protection Program. So it's an opportunity for me to support entrepreneurs and small business owners in another way. And it's something that is really important to the community bankers that I represent.
Well, could you tell us what does the Pennsylvania Association of Community Bankers do? What's its job?
Sure. We're an organization that supports the community banking industry to preserve and protect opportunities for businesses, working families, homeowners to be able to bank in their local communities, that the deposits that they place in their local community banks are then invested in the local community through loans to small businesses or charitable donations to community groups or even for home mortgages and other types of lending. Our job as the association is to work and ensure good public policy at the state and the federal level that ensures that community banks have an opportunity to prosper in Pennsylvania and America. As well, we provide training and education to ensure that our community bankers are at the top of their game to be able to serve the needs of their customers.
Well, Kevin, I've been reading more and more about the concept of private banks. Can you tell us a little bit about what a private bank is and how it differs from your community banks?
Yeah, public banks, I think
Public
is
banks.
the term.
Okay.
And there has been a lot of conversation, and it seems to happen around every time there's an economic downturn, that you have groups of government lawmakers, policymakers who bring up the idea maybe we need a public bank, a government bank to be able to serve the needs of customers. And we've watched over the last several years, over really the last 2 decades, a significant decline in the number of community banks in America. There used to be in 1990 some 15,000 banks in America. Today, there's about 5,000. We expect with a reduction of a rate of about 4% a year, we're probably going to be down to about 3,000 banks within the next decade. Now, there are some in government who believe that fewer banks are better. That with size, Bigger banks can serve a broader range of constituent needs. But what we found is with the reduction in the number of banks, Maura, we've created bank deserts. And unfortunately, many of these bank deserts are happening or occurring in communities of color, where you have whole areas in cities like Philadelphia where local people in the community don't have access to a bank. That's a horrible impact for homeowners, renters, workers, and the businesses that are in those communities. And so as a result, some government officials suggest that maybe government can fill the void, and that if we fund these types of public banks in those areas, that it will be able to do what a private bank can do. Our argument would be to take a different approach. There's too much risk when you build a public bank. There's a lot of risk on the part of the taxpayers, for God forbid if there was a failure. So our belief is that what federal regulators need to do is to improve the regulatory climate to encourage more bank formation, and that new privately held banks would be a more effective way of helping not only in communities of color, but in rural communities, not only in Pennsylvania, but all over America.
Kevin, we talk about, and Maura mentioned that this concept of public banks gains more attention during economic hard times, as you had said as well. About how many states have been studying this concept of having a new public bank?
Well over a dozen. And there was a study of the studies that recently was completed by the state of Washington, who looked at the state of North Dakota, which is the only state in America that has a public bank, started over 100 years ago. But then they also took a look at the studies in Massachusetts, Oregon, California, and other places where they have been looking at this concept. And the state of Washington concluded that the studies are inconclusive, that they found that many of the desires of policymakers who wanted public banks were to do things that, quite frankly, banks currently are not allowed to do because of federal or state regulation.
So when you mentioned that North Dakota is the only nearby public bank out there, it's been around for 100 years. I imagine they've been contacted a lot about how do you do this? How do you set one up? How do you run one? What does North Dakota have to say about it to everybody about that?
Well, what I've found has been consistency in the message by the president and CEO of the Bank of North Dakota, in which their advice to states and local officials is don't follow us and create a public bank in your community or state. They noted that the public bank in North Dakota was founded over 100 years ago. And it was at a time when farmers, when policymakers believed that farmers didn't have access to the banking system. And so they changed the Constitution in the state of North Dakota to allow a public bank, but it serves a very specific role. And in fact, the role that the public bank in North Dakota fulfills is not the one that policymakers and city councilmen in the city of Philadelphia, for example, want a public bank to fulfill. There is no consumer interface between the public bank in North Dakota and consumers in that state. It really is there to support the existing banks, and many of them, again, have fulfilled the needs in their community and are producing the agricultural loans and supporting agribusiness in the banking system in a way that just didn't exist well over 100 years ago in that state.
Well, you mentioned that Philadelphia is actively looking at the idea of a public bank. Is that gaining any traction, and is there any support on the state legislative level for this kind of activity in Pennsylvania?
Sure. Well, there are real concerns about the proposal at the state level. In order for the city of Philadelphia to proceed, it needs to change state laws that preclude a public bank from forming in a community like Philadelphia. But there is real risk on the part of the taxpayers. Other banks, private banks, are federally insured by the FDIC. When you go to the drive-through window or when you go online, and you'll see the logo that says that the deposits that are held in this bank are guaranteed 100% by the Federal Deposit Insurance Company. Well, if you are a public bank depositor, you get no guarantee that your deposits are going to be protected. That's a huge risk for the local taxpayers who would be on the hook if the public bank were to make a bad loan or if the bank was mismanaged. And those are some of the real concerns that we're raising with local leaders in that city, is that if we all work together instead on ways to improve regulation and create an opportunity for the creation, say, of a private bank in that city, we can fulfill the same concern. We can address many of the same concerns that city officials have with the lack of banking access in some communities, but we can do so in a way that protects the taxpayers of the city and ensures that the depositors are protected and that the businesses and the residents and consumers of that bank are assured that it's operating in the highest level of efficiency and banking regulation.
So Kevin, just to be certain that our viewing audience understands, if you are a public bank, you do not have your deposits protected by the Federal Deposit Insurance Commission in Washington, D.C., but they are protected by the full faith and credit of the North Dakota government. Has the North Dakota government ever had to step up to the plate and insure or guarantee funds that have been defaulted upon? Has that mechanism ever been used, Kevin?
Well, again, the purpose of that bank in North Dakota is completely different than the one that's being talked about by policymakers in the city of Philadelphia. So they're not in the business of making risky loans. And when I say risky loans, every loan has a level of degree of risk to it. So the public bank in North Dakota is not involved in that type of lending or capital investment. So they don't. Taxpayers in that state are not on the hook in the same way that city council or other officials in Philadelphia are proposing in that city. And that's a real concern because the studies have shown that it's going to take about $300 million to fully capitalize a public bank in that city just to start up. And to put that in perspective, $300 million is the line item for all of the public health initiatives, the behavioral health initiatives, the services for the homeless, the public libraries, and parks and recreation combined in the city of Philadelphia. So when you think about the ways that this could impact the operation of the city of Philadelphia and the impact on taxpayers, not only in that city, but also for the state, because we would be the backup if there was a failure in the city of Philadelphia, the risks far outweigh the benefits.
Okay, well, Kevin, we've run out of time this particular segment, but I know Maura and I would love very much to have you come back because there's much more in the world of banking for us to talk about and for us to understand. So we hope to see you in the near future.
Thanks for having me, and really do appreciate the opportunity. Your viewers can visit pacb.org if they want to learn more about this issue and more about our organization and what community banks can do in their local neighborhoods.
Okay, well, we'll see you, and we'll see you in the audience right after this. Be right back.
Behind the Headlines is brought to you as a public service by the Pennsylvania State Association of Township Supervisors, the largest, most influential municipal association in the Commonwealth. Since 1921, PSATS has been preserving and strengthening township government and securing greater visibility and involvement for townships in the state and federal political arenas. Covering 95% of Pennsylvania's land mass, townships represent 5.5 million residents, more than any other type of political subdivision in Pennsylvania. Additional underwriting provided by the Worrell Highway Foundation, based in Carlisle, Pennsylvania, by the Edward H. and Jeannie Arnold Foundation, and by the Pennsylvania Manufacturers Association. Business in Pennsylvania is our business. Behind the Headlines is also supported as a public service by the Pennsylvania Highway Information Association, the go-to source to learn about transportation projects and issues. Visit pahighwayinfo.org.
Hi, welcome back to the second segment of Behind the Headlines. And on this segment, Maura and I are joined by a expert, one of the best experts in Pennsylvania on the subject of transportation. If you want to know about the conditions of bridges and highways in your area, there's nobody better than Bob Latham to talk with us about this. Bob, of course, you're the Executive Vice President of the Pennsylvania Associated Constructors. Maura, how are the roads and bridges in your neck of the woods at this point?
Well, they survived the winter. We had a pretty tough winter. I think they're okay. We're heading into the season where we have to deal with a lot of construction, so everybody has to be patient, but that's a good thing, right, Bob?
Yes, we'll have an opportunity this spring to get out and start fixing roads and working on some of the bridges around the Commonwealth. We did, as Charlie mentioned, we had a tough winter, and so a lot of snow plowing and a lot of ice removal and that sort of thing. And of course, that plays havoc on some of the conditions of our roads and bridges. COVID impacted our budgets considerably last year, and I think the Department of Transportation is still somewhat struggling from a financial standpoint, kind of a 1-2 punch. First of all, the COVID. Although they did get some relief from the federal government on that, I think they're still a little bit behind on getting some of these projects out. So,
Bob, stop, hold up right there.
Sure.
You said, because most people understand how that works. I know there's some in our audience that don't. How did COVID impact those budgets? I know what you're going to say, but I think a lot of viewers don't.
Yeah, certainly, great question. So our roads, bridges, and highways construction, reconstruction, maintenance, safety projects are all funded. About 75% of it is funded by a fuel tax known as the gas tax, and when people don't drive, as we did not during the shutdown, gasoline is not consumed, and when gasoline is not consumed, there's no revenue coming into the transportation funds, or what we call the motor license fund, and so that certainly had a negative impact on things. We did shut down the projects last spring. Restarted them in June, and then quickly what we call accelerated. So everybody worked very rapidly, quickly, and caught up. And then all those bills came due in the fall, and that hit the Department of Transportation's cash flow. And like I said, they've been kind of struggling ever since to try to make that up. Fortunately, a couple of the COVID relief packages out of Washington were helpful. And we're seeing some of that come back now. And there's a lot of money now coming to the states from the second COVID package known as the American Rescue Plan. And we'll talk a little bit about how we think we can use some of that money in order to improve safety of our roads and bridges in the Commonwealth.
Well, Bob, you and your members have been very active in recommending ways to get past some of the funding crisis that PennDOT's been in, and you've had to retool or relook at the what your proposal is. But what does APC think would make sense right now in order to, because we're still underfunded? I think we need to make that very clear. We still don't have the right amount of money, even though there's been an infusion. But what makes sense right now in terms of bolstering back up the funding for construction projects?
Sure. Well, infrastructure and transportation are in the news recently because President Biden has proposed a $2 trillion infrastructure package. And it's important for everybody to know that, over the years when we've talked about infrastructure, for the most part, we were talking about roads, bridges, airports, railways, in some cases, waterways and things like that. The president has proposed to greatly expand the definition of infrastructure to mean not only things like the electric grid and broadband, but even things like fair housing, some social programs, and some other things which I think are starting to create some pushback in Congress. But it's also important to know that out of this $2 trillion plan, only about 115 billion, which suddenly sounds like not much money, is going to roads and bridges as part of this proposal. So while it would be an increase, Pennsylvania would certainly see more money out of this. This is a greatly expanded thing. But my key point is it's going to take some time for Congress to deal with this, to vet this for this. So this is not something that's going to happen tomorrow. And in the meantime, in the short term, we do have money that's come to the state that's available that we think that could be put to use for improving our roads and bridges and helping the PennDOT's budget situation.
Yeah, Bob, I heard there are some critics, in fact, in Washington that claim that only 5% of this American Rescue Plan that's supposed to be about infrastructure is about infrastructure.
Yeah, well, there's money that's, that's what we would term the actual infrastructure, which is, physical construction of things, whether they be roads, bridges, electric grid, waterways, things like that. And then there's a whole bunch of other stuff, but only about 5% is going to our nation's transportation system, or our nation's highway and bridge system out of this plan. The important thing for your viewers to understand is that here in Pennsylvania, we pay, as I mentioned earlier, we pay about 75% of our funding for roads and bridges comes out of the gas tax or fuel tax. And right now, throughout the years, the state has siphoned off about 11 cents per gallon of what you pay in the gas tax, or 20%. So you're paying about a 50 plus cent gas tax. 11 cents of that is not even going to roads and bridges. It's going to the general fund to pay for the operations of the Pennsylvania State Police. The state police are very important, but we think that the money that users pay in gas taxes ought to go to road improvements. We have an opportunity to do that now. We can put that money that is being shifted over to the general fund. We put that back in the transportation or the highway fund and use some of the COVID relief money that came down in the second wave, if you will, to pay for the state police and other important things in the general fund. So that's something that we can do in the very, very short term. That would boost a lot of projects, move a lot of things forward. A number of states are also taking advantage of low interest rates and doing some bond financing, and bond financing for capital projects is something that is a useful tool for transportation and highway and bridge construction projects. A lot of states are doing that. You could take a portion of that money, bond finance against it, and really, really put a lot of people to work, fix a lot of bridges, and make a lot of roads a lot safer. So we've got two options. We can kind of stop this shift of gas tax money over to the general fund, take that back, do some bond financing, and really move a lot of projects forward, getting a lot of people back to work, fixing roads, and making things a lot safer and easier for commercial traffic here in the Commonwealth as well.
Bob, when we just about every time we have you on and talk to you, we talk about this diversion of money over to the general fund. That's not going for roads and bridges. And most Pennsylvanians support that 11 cents of the gas tax going back into the roads and bridges. Mm-hmm. This budget, current budget, has the money continuing to go into the general fund. Are we ever going to see a change in that funding line item?
Well, that's a great question, Maura, and I think now is the time to, as the old saying goes, rip the Band-Aid off. We can do that now. We've got, to complete the metaphor, we've got the salve that's coming down from the federal government that can make the general fund whole. That was always the question. We'd always complain about this and say, people are paying 11 cents a gallon in gas tax. They're not getting it into the highway funds. And, as far as dollars, that's $700 million. That's a lot of money. And so the response was, well, that would leave a hole in the general fund. And what do we do about that? And so now our response is, well, you've got $7 billion coming from the federal government over the next 2 years. And you can make this move now. The 2024 budget then could address whatever appropriate levels should come out of the highway or motor license fund to fund the state police. Certainly a lot less than 700 million.
Well, Bob, your proposal, the Associated Constructors proposal regarding this money that's coming from Washington, D.C., you actually have a three-pronged proposal. Could you go through just each prong briefly and tell us how it all fits together?
Certainly. So essentially what we're saying is for the next 2 fiscal years, and that's fiscal year 2022, which starts in July of this year, and then next year, and 2023, which, obviously the subsequent year, which is the time frame in which the federal government's COVID relief package is available. You simply take that $700 million that's been going into the general fund and put that back in road improvements, road safety improvements, fixing highways that are too narrow, making our bridges more safe, and putting people back to work. And then use that money, as I mentioned, $7 billion, or 10 times the amount that we're asking for, to back and fill the general fund. That's point 2. So the general fund isn't disrupted. The state police are funded as they should be. And then point number 3 is you could use a portion of that money that is moved back to the highway fund as a debt service mechanism in order to bond finance a lot. You could do like a $2 billion bond finance that only requires $150 million a year in debt service, and move a lot of projects forward. We've heard a lot lately about a proposal to toll bridges around the Commonwealth. You could possibly use this bond financing mechanism to not have to toll those bridges, while a more comprehensive long-term approach is looked at, and while the Biden plan is being vetted in Congress. So we're focused on sort of a short-term plan, a 2-year plan that really boosts the ability of the Commonwealth to move projects forward and make things safer for people. They get to see their gas tax money that they're paying now going to roads and bridges. And then while things are vetted out for the future, this will allow things to move forward in the short term, like the next 2 to 3 years.
Well, go ahead, Laura.
Charlie. I was going to ask one last quick question. Other than funding, what are some of your major priorities heading into the remainder of this year?
Well, thanks. As always, safety of motorists on the highways and safety of our workers. We're pleased that we're in the second year of a program that has automated speed enforcement, or speed cameras in the work zones. We're seeing a tremendous marked drop in speeds, in speeding, and that was the goal of the program.
And that's
our goal is to have 0 fines.
Unfortunately,
we want people driving the speed limit and not getting ticketed. So hopefully we'll continue to see that happen.
Okay, thank you very much for being with us today, Bob. Unfortunately, we're out of time, and Maura and I look forward to bringing you back again very soon and seeing how the programs are running. And we will see you next week back here with Behind the Headlines. Tune in then.